Hey, what's going on? Good morning, friends. Welcome back, YouTube, for another update. Seems to be happening here. Oh, that's Bitcoin. Get out of here. Sneak peek for you if you want it. So, I ditched all my annotations just because I don't really want a bunch of stuff on my chart. This was one of the main focuses here, these series of down close candles. I was mentioning I was like to see it go up, if anything. And if it did, that I'd be focused on this candle here, and I believe we had this fair value gap. And so we made it there. Now just call it a lucky guess. Don't think nothing of it. It's not entirely impressive. We just happened to go there from a discount to a premium. We went and grabbed a bunch of liquidity, and now, of course, we'd go back up. But the information that we're getting is quite awesome. So we've got our close for the daily candle, and this is what we got. No tail on this guy. Now I want to bring your attention to this gap here. Now when it was created, there was another one in the previous contract in the same fashion where it was really wide opening and it never repriced to it, and it dropped from the top. Those things torture me. Okay, it's not that it's not going to go back there 100%. It's like more like 99, but because I have that expectation all the time that these things are magnets, then I just like it's hard to leave the habit. So you know what I'm saying? We don't ever have to we don't have to come back here for a long time. And we could be up only for a while. So now that we're in the weekly chart, let's take a peeky poo. This candle bottoming at consequent encroachment of this rejection block. Oops, here. Right there. Stopped dead in its tracks and gapped up. Now, that was an attack. That was a hardcore attack. So now that we're here and we've got this information and we're going up, I'm going to start aiming for this guy here. We closed the daily candle above this, what would have been a bearish PD array if we were going down. It's not showing that. So I like what's going on. So I'm going to take this blue shaded area, and that was the inversion fair value gap here. Oh, no, excuse me. It was the series of up close or down close candles here. These guys here. And I'm more interested in what would have been a bearish order block if we were bearish. That's what I'm really interested in now. So now that the daily candle has closed above mean threshold, this is going to be fun. And this is going to catch many people so off guard, it's not even funny. So how far up we travel? Well, use the last Asian range or the flout that we've created and use those deviations for price targets. I'm going to be aiming for 25,525 or like 25. Somewhere in around there. For October. Not just this week. So I'm just aiming for it for the month. Okay, so with these levels in mind, I'm actually going to grade this guy here, and you guys should have these levels on your charts. You don't need any of the discounts anymore. Keep that on your chart just in case. So now that we've got these levels, let's go into a 15-minute chart. Just go see what kind of profile materialized. So that was the close, and that was the open. And she just went up. If you had trouble today, Michael had tipped his hand to the public to just sit flat, because what happens is people, when they see this type of movement, they'll immediately think, oh, it's got to keep going, and they can't let that idea go. That's the general retail sentiment is, and I quote unquote, buying pressure. Okay, that's what they're seeing that as. So right now, I see a bunch of liquidity being built right here. We don't have to come in there. We could take that level here by 20 ticks and just start flipping out. We could drop too. So I don't like doing that. We could go higher, could go low. That middle point here, that's my support and resistance level. If we lose that, I'm going to be aiming for big things below the market on the monthly chart. But if we hold that level, I am turbo giga bullish. So that's the price point where it's not, it could go up or could go down. That's the specific price point that I would want to see hold on a closing basis on a daily chart. But right now, this is what we got. So let's go into a 5-minute. And so you take those levels and just go look at how it's all respected. And take a look at your performance today, a banking holiday, and like you're expecting seek and destroy, really. You're expecting the holding pattern. That's just typical. And if you were able to be one and done, if you were able to practice losing today, congratulations. If you didn't trade today, pat yourself on the back. And we've got a nice accumulation range to start our week off, which is beautiful, because this is the beginning. Beautiful information. Check out a 1-minute chart. Right about there. Look at when it breaks inside. It's running up and it's closing above in here. Comes down and it's just hitting the midway point from this level to this level. Comes and hits that. And then you see how it's trending? It's trending and it's making your patterns. It just came from a discount. And then this is where people start dooming out. Look at the respect of that. Beautiful. Leaves equal highs. Comes down. Drops into the discount. Stops everybody out who's trailed their stops. Runs back up. SR flips this blue shaded area right here. This is the beauty, because it's time for price to run in between 1 and, 5 a.m. This is when you want to see the price run in London. Look at that. And it just runs out all these people who were short. So you got your retracement. Now just notice where you're closing. You're closing above some serious price points, but you're not expecting anything super fancy. It comes right down and grabs all this liquidity here from people chasing this bull flag here. Wiggle, 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 slam. Okay. Let's just check out 5 here to 7 a.m. Right there. I wouldn't say that London lunch did very much. And right at 7 a.m., there's the slam down and the stop hunt. There's the money printer-esque type trade right there, just right at 7 a.m. And wiggle, 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 makes a bear flag, snaps it in their faces. Why is that important? Because it was in a discount. You're expecting bearish patterns to fail in a discount. And it went to a premium and that failed. But just notice how it's like SR flipping these levels and respecting them really nicely, especially when it's ready to go. This one coming down eating that discount, ripping right back up for these guys. This was hell today. This was absolute hell. So I want this to be a lesson for you guys. When to sit out. You know, we do so well with these setups. There's no point in forcing it. So just back to the daily chart. And what I'd be looking at for tomorrow is to completely flip this guy here. And I will pay the trader right here. And I'm going to leave a runner, but essentially I'm aiming for this. I'll likely pay the trader right here. This is that bearish order block in the weekly chart. Pretty sure. No, excuse me. That's the wick. We're already up. That's the bullish. The bearish order block is what I want to key off of. One of these price levels. I don't really want to see this break. So if it comes to here at my time, I'm going to be looking to reprice, and that's the wick. So we're already above mean threshold of the order block, and now I'm going to aim for this bearish PD array in the premium. And leave my runner for here, because, man, that would be funny if it just snapped. Which I'm expecting. So, God bless you guys. Thank you for joining, and be safe.